Hello, and thank you for tuning in today to today's webinar with Panorama Consulting Group. Today, we have the pleasure of speaking with Oracle NetSuite's own Scott Beaver, Senior Product Marketing Manager. Today, we're going to get his recommendations and considerations for those looking to move off QuickBooks. Thanks for joining us today, Scott.
Happy to be here, Justin.
We appreciate you coming in. So before we get started, we at Panorama want to thank the viewers of our webinars. So we'll be giving away a free consulting session to the first 3 respondents after today's webinar. Stay tuned all the way to the end of the webinar to get some more information on this opportunity. With Panorama Consulting Group being an independent niche consulting firm, we specialize in business transformation and ERP system implementations for mid to large size private and public sector organizations worldwide. We also specialize in OCM strategies and business process management, among many other solutions you can see here. Our biggest industries we work alongside are within manufacturing, professional services, and technologies, but we deal with many other sectors and clientele as well. Speaking of clients, as you can see here, our client portfolio includes many well-known local and national and even global customers across multiple industries. We also offer a deep and comprehensive ERP experience with hundreds of available packages that we have already evaluated and implemented for our clients. So to get started here, let's please tell us a little bit about yourself, Scott, and how are you doing?
I'm doing great. Thanks again for having me, Justin. Just to give you a little bit of my background, I've been in the technology industry for almost 20 years now, working in a variety of organizations, but mostly in the financials, ERP, and supply chain space. This is just a quick look at our customers. This slide says 2,700. We're actually over 27,000. We're actually over 28,000 now. And just to give you a sense of some of the industries that we support: software, services, A&P, that's advertising, media, and then we do a lot of business with not-for-profit organizations, as well as your traditional manufacturing, wholesale, and retail organizations.
All right, so let's get started here. Who is Oracle, and what is Oracle NetSuite designed for?
Great question. So Oracle NetSuite is an ERP provider. We're designed for those early stage, emerging, high growth organizations up to mid-sized organizations that are looking to move beyond whatever they have as a legacy system, or even an entry-level financial system like QuickBooks. And the way we help those organizations, we want to go in and start at the financials area with them, make sure they have all their processes buttoned up and have the right solution in place. And particularly, we're looking at organizations that are looking to move to a cloud-based environment.
So you mentioned QuickBooks there, and speaking, this whole webinar is about the possible recommendations of moving off QuickBooks. Why are organizations moving away from QuickBooks specifically?
QuickBooks is a good entry-level system, and it's great for companies that maybe have been doing things with spreadsheets first beforehand. But if as a company starts to grow, they begin to encounter various limitations. And one of those challenges is you've got multiple sources of data, or you're using spreadsheets in combination with 1 or 2 or 3 other systems, and so you've got these multiple sources of truth, and it's very difficult to get a consistent understanding what's happening in the business. And as the company grows, that becomes a real bottleneck. Other issues, there are certain security concerns, compliance concerns with solutions like QuickBooks, things like the ability to turn on and off audit logs, things like that. And then with on the on-premises versions in particular, which is the majority of QuickBooks customer base, there are definite scalability issues. So as the organization expands, adds more accounts, has more transactions, and the database gets larger, then it really starts to slow the system down. It becomes very cumbersome. Of course, there are also a lot of things that QuickBooks doesn't do. For instance, if you're a services organization and you're dealing with revenue recognition issues, well, that's something you wind up having to do outside the system, and then input the data in when you're during the close process. And then I think the final 2 issues are: one, QuickBooks has very rigid reporting capabilities. You can't it's not easy to build reports. You can't really customize reports that come standard. So, companies wind up having to go to a consultant or export data and build reports through Excel or some other process. And then, finally, because, as I said, there are a lot of things that QuickBooks doesn't do that organizations need. So they wind up having a lot of third-party solutions sort of integrated. And so they can't get that real-time view because there's a lot of batch transfer information. Integration sometimes breaks. So again, as a company is growing, they need that single source of data. They need that real-time view of what's happening in the organization. And that's, a big reason they move off of QuickBooks.
Okay, thanks for explaining the why there. So when does that transition kind of mindset start to occur?
Yeah, so I talked about as the business grows, it's one of those is if a company's adding locations or subsidiaries and they need, they need to track data in all those different ways. That is really difficult with QuickBooks. So again, it's all about expansion, but particularly if I'm adding subsidiaries with QuickBooks, you wind up having to have essentially a separate database for each of those subsidiaries. It's not a multi-subsidiary platform. So each organization kind of has to operate independently, which makes doing financial consolidation extremely cumbersome. So, because you're having to log in and out of different systems, export data, combine it. And then the other issue, as I touched on briefly, is when they start experiencing those performance issues, sluggish response time, system crashes, lost data. Again, a lot of that is more consistent or more on the on-premises solutions, which tend to be the bulk of their clients right now. Another issue with regard to performance is that, again, that issue of having to log in and out of the system and having to do things in third-party applications such as Excel. That also becomes really cumbersome and is a great or increases the risk of errors, data errors, which just makes the whole financial close difficult.
Okay. Are there any other problems, a QuickBooks customer, might encounter?
Yeah. So if they need to comply with US GAAP, either because at some point they want to go public, or they're looking to raise additional capital, or maybe they're just expanding their line of credit, that's going to be a little more challenging for companies with QuickBooks because it wasn't initially designed to do that. So, companies that to comply with GAAP, you have to use accrual basis accounting. And the basic structure of QuickBooks, the way it was originally created, was around cash accounting, which is very different. Things like, when you recognize revenue, when you recognize expense, so the whole accrual process, that isn't really core to how QuickBooks was initially designed. And then again, those inflexible reporting capabilities, lack of features, things like revenue recognition being one of those, depreciation schedules, that sort of thing. It just becomes, there are workarounds for a lot of these things, but it just becomes cumbersome to deal with. So those kind of things limit the growth potential. Either that or require an organization to hire more people within their accounting department. So it's really not scalable as a business when you're using this QuickBooks as again, it's fine as an entry-level system, but as you're growing, these things become an issue.
So what are some of the examples of different processes that companies using QuickBooks might be struggling with on a day-to-day basis?
It really depends on the organization, of course, but I mentioned revenue recognition just a few moments ago. With different accounting bodies, FASB in the US, IFRS internationally, trying to come together and harmonize the rules on how you treat certain things like revenue recognition, it's become more challenging for organizations, particularly services organizations that need to bill in increments, just to make sure they're compliant with those standards. And that's not something that's built into QuickBooks. So figuring out the revenue schedule, the individual components of a contract, when things can be billed, et cetera, that's a complicated process, and many times organizations wind up doing that in Excel, or again, they have to use a third-party application and somehow get that data into QuickBooks so that they can do their end of month reporting. And so that's cumbersome. Anytime, particularly if you're using spreadsheets, there are problems with version control. You're entering data, the same data multiple times, so you've got the risk of data entry errors. And similarly, there's another new process is for accounting now for operating leases on your balance sheet. In the past, that wasn't required. Now, for companies that want to comply with US GAAP or international accounting standards, you're going to have to treat long-term leases. Anything over 12 months is going to have to be appear on your balance sheet, and there's several different calculations that have to happen on a monthly basis to account for that. What's called a right of use asset. Again, not something that's built into QuickBooks, so you either have to try to do that in Excel or some other spreadsheet application or a third-party lease accounting application. And the same with fixed assets. Depending on the size of your organization, you could have anywhere from 50 to thousands of fixed assets, and making sure you have the correct depreciation schedule for those is only part of it. You also have to have a way of knowing when new assets are added, when assets are decommissioned or sold. So that's another thing that's really challenging from an accounting department that has to rely on, particularly if they're using spreadsheets. And then finally, as I mentioned, that's just that whole intercompany consolidation at the end of the month. I've got to do a single set of financial statements, whether I'm a publicly traded company or even a private company. And when each one of those subsidiaries has a separate database, there's no way to integrate those. It's really challenging. That data has to be exported, and then again, I'm probably using spreadsheets, or maybe there's a third-party application that I'm tying into QuickBooks.
Okay, so you touched a little bit there on the very end of that intercompany accounting difficulties. Would care to elaborate a little bit on why it's so much of a problem with QuickBooks?
Yeah, so the first part of that I talked about. So if I've got multiple subsidiaries, they each have their own database, all the transactions are separate, and I can't link them natively within QuickBooks. So I've got to have some other way of doing that. But on top of that, during the close process, I have to eliminate any intercompany transactions. So if subsidiary A does business with subsidiary C, I have to eliminate those before generating my financial reports. And because those transactions are, each side of the transaction, the sales order and the invoice are in separate databases, there's no way to link them. So it becomes a manual process of searching through this quantity of data to find those intercompany transactions. And there are also the issue of intercompany accounts. So yeah, it's great. I've identified the transactions and I can eliminate them from my reporting, but then there's how do I manage that flow of money? Am I physically paying these invoices, or am I creating these intercompany accounts that I have to balance? And again, that's just not something that QuickBooks was designed for.
Okay, so it sounds like a lot of these processes definitely take a ton of time. Time is money these days. But how might these issues with QuickBooks kind of affect the overall growth of a company?
Yeah, so as I said, performance problems definitely becoming an issue. And with the limited capabilities, because QuickBooks only addresses a specific set of financial processes, and it's really not designed for other activities that impact those financial processes, there's no way to really get a consistent view of what's happening in the business on a real-time basis. And so I don't have that opportunity to, analyze what's happening. I wind up managing a lot of information in spreadsheets. I'm entering data maybe in multiple different systems. For instance, maybe sales takes an order, enters it in the CRM. Then that information's got to get sent to the warehouse if it's a product company, so the order can be picked. And then something has to go to accounting to alert accounting to send an invoice. And each one of those handoffs, number one, it creates this risk that something gets missed, or there's again a data entry error, but also delays that order to cash process. So the longer it takes me from the time an order is placed till the time I can generate an invoice, the longer it's going to be before I get paid. And so not having all the systems integrated slows down that process. And then finally, that inflexible reporting I talked about, and the fact that QuickBooks really doesn't have any business intelligence capability, well, I don't have that, that ability to look for hidden problems maybe, or identify potential growth opportunities. For instance, how am I going to know that a certain product is selling really well in one market, but it's not selling as well as in another geography, and try to figure out why that is. So things like that could really help accelerate my growth, I simply can't do in a solution like QuickBooks.
Okay, so talking about growth right there, some companies, they definitely are going to be growing larger and larger, and potentially go public one day. Can publicly traded companies use QuickBooks?
In theory, yes, and I believe there are probably some, but it won't be easy. Again, for all those reasons I talked about, like I said, QuickBooks wasn't designed for accrual accounting requirements that public companies are required to follow, but there's also issues around governance. For instance, one of the most important things that a financial application needs is a complete audit trail of everything that gets entered into the system, every change that's made. You want to make sure no one's going back after the fact, reopening a month, making adjustments to make the numbers look better, that sort of thing, ways to control fraud, etc. And with QuickBooks, there are some audit log capabilities, but you can turn those off. And the other challenge with QuickBooks just from a governance standpoint, they have limited user role capabilities. So, essentially you either have complete access to the system or you have almost no access to the system. And so that creates situations where it's hard to maintain separation of duties. That makes it harder for someone, to make sure that the AP person only does AP and the AR person only does AR. So there's, that creates an opportunity for fraud, but it also means that if I have complete access, I know to turn those transactions off, or the audit logs off, I can do a lot of questionable things within the system, and there's no way of tracking it. And again, from a governance standpoint, that's just definitely not appropriate, and it also creates anxiety for your auditors as well.
Okay, so QuickBooks, you kind of previously mentioned this, that it's mostly an on-site software. With kind of this in mind, why are so many other companies moving away from the on-site softwares to cloud solutions?
Yeah, I will say that QuickBooks does have a cloud-based solution, and I'll get back to that in a moment. But the biggest reasons that organizations are moving to the cloud, one, just that ability to work from anywhere. Obviously, with the pandemic, a lot of organizations had changed the way they work, accounting in particular. So, accounting is generally a very collaborative activity, particularly when it comes to, say, the month-end close. And suddenly you couldn't be in the office. So that opportunity for remote access was critical. And while some organizations may have VPNs that allow you to dial into a network, those connections tend to be very slow. There's always the risk of the connection dropping out, and limited number of people can connect at a given time often. Another reason is just simply looking to maintain or even reduce certain overhead, IT overhead in particular. IT staff, they're highly trained, very knowledgeable, and that makes them very expensive. So anything I can do to minimize that, or not to have to add headcount, is attractive. And then finally, every organization wants to take advantage of the most advanced capabilities if they apply to their business. If I'm using on-premises software, however, I'm going to have to pay to get those additional features, and I may have to pay quite a lot. Less common with QuickBooks. It's not like I'm paying tens of thousands of dollars for a new feature, but still, there's that whole process of, I've got to upgrade. Do I make the upgrade? Is something going to break if I do the upgrade? So companies want to avoid the upfront cost, the risk, and they don't. And the great thing about cloud-based solutions, they tend to be subscription-based pricing. So there's no capital investment. It's an operating cost instead of a capital investment. So that's attractive from a financial standpoint as well.
Okay. You did mention that QuickBooks has an online version. You care to elaborate a little more on that?
Yeah, so they do have an online version, and they're adding functionality, but it still lacks important features that are found in the enterprise version and some of the other versions of their software. Perhaps it'll catch up eventually, but if none of the on-premise versions meet your needs and you want to go online, it's still not going to meet your needs either potentially. And again, the same issue with just as the desktop version, there are a lot of things it doesn't do, because QuickBooks job, all they do is accounting. They don't do full enterprise resource planning. So, there's going to be limitations there, even with their online solution.
Okay. So what makes NetSuite solution any different?
Well, number one, we're cloud native. We were built from the ground up for the cloud, with the very first ERP suite built for the cloud, and it's a fully integrated system. So it's not like I've got third-party integrations. I've got applications from different vendors, or maybe a company that's acquired multiple companies and tried to tie it all together. No, our applications are built again from the ground up with the same underlying architecture. So they are fully integrated from day one. So that's an important piece of that. And again, being able to provide supply chain, being able to provide HR, CRM, professional services, as well as financials, and having it all connected together so that I can give anyone in the organization with the appropriate permissions that single source of data, access to whatever information they need to do their job, while also preventing them from accessing information that isn't appropriate. For instance, I may not want my AP clerk, I probably don't want my AP or AR clerk getting access to salary data. So I only want HR to have that, and the individual employee. So things like that, that is one thing that really sets NetSuite apart, is having all that, those controls, having all that single source of data in a cloud-based environment. The other things that set NetSuite apart were very much department and industry specific. So again, you do have all the finance capabilities, but you also have traditional ERP capabilities like manufacturing solutions, distribution oriented solutions, if that happens to your business, services industry oriented solutions. And then just a few other things is built into NetSuite is a full suite of business intelligence tools. Not only do we provide 200 plus standard reports out of the box, each of those reports can be customized, and then however you want to. And then we also have really sophisticated solutions for building ad hoc reports, saving those reports so that they're constantly updated, and then just other capabilities built into the system that allow you to get not just pull data, not just generate a report, but get a visual picture of that as well. So the way information is displayed is just as important as being able to have access. And then finally, NetSuite is a truly global solution that's being used in over 215 countries and over 190 currencies. Again, with QuickBooks, they have limited languages, 5 or 6 or 7. They have very limited languages. It's really a US based, and some some Europe. They're not really built for all the different languages that a growing organization may need. So that's an important thing that we offer that an entry level solution like QuickBooks just doesn't.
Mm-hmm. That's pretty amazing. Isn't for really, cause it sounds like it's really for large, companies being in so many languages, having so many different possibilities in terms of what you're providing, but are ERPs just really for large companies? Like, could smaller businesses utilize ERP?
Yeah, so we hear that, we hear that a lot. And there was a time when you couldn't, even purchase ERP software unless you had $1 million to spend. Mm-hmm. And so it really was for big organizations, but that's no longer the case. With technology advancements, things like cloud-based architecture, and new programming approaches to programming, and just more flexibility. ERP is for really almost any company other than, say, a one-person, 1, 2, 3-person business. If you have business processes that cross multiple departments where different people handle part of that process, then ERP could be a good fit for you. If you currently have different systems for different aspects of the business, if you've got maybe an accounting solution, maybe you've got order management, inventory, CRM, field service management, if you've got all those different systems and you're trying to integrate them, then ERP may be a better solution for you, particularly a solution where all that is built into, from the get-go, and it's all integrated as part of a single infrastructure, so you're not having to do that batch transfer of data. And then finally, if you want a single source of real-time data across your organization, and the ability to combine both the financials with operational components to really analyze how your business is performing, then ERP is going to be a better solution for you than trying to integrate multiple systems. So I would say any organization that wants to grow, any organization that is growing rapidly, any organization that really wants to expand beyond their local market, those are going to be a good fit for ERP. And then just as important, if you're an organization with multiple subsidiaries, independent business units, then ERP is going to be better for you than having independent, QuickBooks instances, and particularly an ERP solution that's designed from the ground up to support multiple subsidiaries with a single source of data.
All right, thanks for elaborating on that, Scott. That's really helpful, actually. That's definitely something not everybody knows in terms of ERP. Is not just being for those large companies anymore. But we do appreciate your inside advice and solutions, kind of what we've done this entire time. Looks like we do have a couple of write-in questions, so let me take a look here. Is the cloud secure? That's one of the first ones here.
That's an important question. Again, you hear about hacking and all this. Well, the cloud is actually more secure than most businesses are, because this is our business, right? So we have to maintain security, and have all sorts of third-party audits done to make sure that not only are we secure, but we're controlling each company's data and controlling any personally identifiable data. So absolutely, cloud-based solutions are secure, more secure in most cases than on-premises solutions. And so, while that's a common question, it's no longer something that companies should need to worry about.
So the next question looks like, how long does a typical implementation take for an ERP?
That's a great question, and it's one that there's not an easy answer to that, because it depends on what you're implementing, the complexity of your business, and how the software needs to map to your business. That's one thing that I do want to stress. Today's ERP solutions, they are designed, or the best ones are designed to map to the way your business works, not force you to change everything you do, which was sort of a problem with the first wave of ERP a couple of decades ago. But depending on what you're trying to accomplish and how you structured, you can be up and running in as little as a couple of months. We've had many organizations that are up that quickly from the time they decide to move forward. They're using the system live, and then just a couple of months. Others where there's a phased-in approach, it may take longer. But one thing we stress, as I alluded to earlier, is that financials first. You need to begin the whole process by getting your financial house in order, and make sure you're using the system for that, and then you can add on the other capabilities that you may want.
Okay, that definitely makes sense. For this last question, it looks like we have time for, can we implement an ERP remotely?
Yes, you can. So, that's one of the great things about the cloud, is it is remote. And it's not on your premises. So yeah, you can implement it remotely, and that's how NetSuite works. There's massive configurability if you want it. We even provide a platform for developing your own capabilities and integrating that or building that with our platform to enhance or expand the system. But yeah, it's designed to be implemented remotely. We're not, it's not like you have to go on site and install servers. It's just our whole process is built around that idea that we can do it remotely. If you want to have someone come in and meet periodically and discuss your processes, certainly that's, you can do that. But as far as configuring the system so it works for you, that can easily be done remotely.
All right, awesome. Thank you so much. So if you'd like to inquire about Panorama's comprehensive services, feel free to visit our website at panorama-consulting.com, or you can reach out to our Director of Innovation, Alan Sultan, at his email shown here. Thanks again, everyone, and we really appreciate your time, Scott. We hope everyone has a great day and appreciate you listening.
Thanks, everyone.